Small business health insurance shouldn't feel like a ransom note. If you've ever looked at group quotes and thought, there goes my profit, this video is for you. I'm going to break down 3 real benefit options that keep your employees happy without necessarily draining your cash. We'll cover the costs, the pros, the cons, and at the end, I'll give you a quick guide to help you choose what's best for your business. Welcome back to Insured AF, Accurate and Factual. This is the place where you'll learn more about health insurance and small business benefits than you ever thought you needed to know. Or we'll cure your insomnia. I'm McGarity. I'm a health insurance and small business specialist, and it's my job to help small businesses build benefits that employees actually appreciate at prices that owners can stomach. Here's the trap that most small business owners fall into. You think your only options are offer a bloated group plan and have benefits that nobody needs, or offer nothing and risk losing people to bigger companies. Not true. There are smarter middle lanes available to small businesses. And with 2026 looming and changes in subsidies happening, you need a setup that works now and keeps you flexible for later. Let's start with the default, traditional group plans. Traditional group plans can work for small businesses. The average cost for ages 35 to 50 is between $600 and $800 per employee per month. Sometimes more if your group is small or you have a couple of people who are in the higher age bracket. The renewals, 10 to 20% hikes aren't uncommon, especially after year 1. On the plus side, this is one plan. It's easy to enroll, everybody's in the same network, and it looks competitive on paper. On the downside, it's expensive. One pregnancy, one cancer case, your whole group's premium gets hammered. Renewal increases can be brutal, and a one-size-fits-all usually means at least one unhappy employee. The bottom line is, group plans work for larger companies with deeper pockets and more employees to spread it out. For most small businesses, it is a money pit. Here's a smarter play for many small teams. A marketplace plan plus supplemental coverage. Here's how it works. The employee goes out and finds their own marketplace plan, many qualifying for subsidies. Then the employer adds affordable supplemental benefits to protect against those big hits like deductibles, ER visits, or hospital stays. Now you might ask, why not just give them extra money so that they can pay for their monthly premium? Because extra money counts as income, and that can reduce or even kill subsidies, which makes premiums even higher. So you paying them more makes them pay more for their premium, and everybody loses. Marketplace plan premiums vary widely. Supplemental options like accident protection, hospitalization protection, or critical illness run about $150 per employee. Now the good side about this is employees keep their subsidies because you are not inflating their taxable income. Supplemental plans cover the scary gaps that are not covered by their marketplace plans, like deductibles and out-of-pocket maximums. And each employee picks a plan that actually fits their needs, like their doctors, their prescriptions. The con is if subsidies expire for them in 2026, their premiums are going to jump. And without direct employer dollars, some employees are going to feel that base premium. The bottom line of this option, though, is it lets you offer real benefits without making them more expensive. And for many small businesses, this is really the sweet spot. An alternative option to that is offering that extra money. Basically, instead of group coverage, you give a monthly stipend. Typically, it covers about half the premium. And the way to kind of average it is if you take the employee's age and multiply it by 10, that's typically a monthly premium estimate. It can be plus or minus, but for example, a 40-year-old averages about $380 to $420 per month. You cover $200, they cover $200, and the good part about this is you have a predictable cost. You set the budget. You know exactly how much you're paying out every month. The employees, they choose their own plan, and offering something still beats offering nothing. The cons of this is if it's not structured correctly, stipends do count as taxable income, which can reduce subsidies. So this is better for groups that have incomes that don't qualify them for subsidies. And every employee may be on a different plan, but it's a solid middle ground. You just have to structure it more carefully and maybe have somebody help you with it. Here's your 30-second cheat sheet. If you need simple HR and you don't mind the higher cost, get a group plan. If you want to maximize employee value without inflating their income, do a marketplace plan for them and offer a supplemental plan from you. If you want to budget control, still help your team, and most people don't qualify for subsidies, give them a stipend. Most of my clients save between $150 and $300 per employee per month by stepping away from these bloated group plans that they don't need. So if your group quotes are gut-punching your budget, don't just sit there and take it. DM me the word benefits and I'll map out a custom plan for your team. And if you want to walk into open enrollment with confidence instead of chaos, grab the Health Insurance Workbook. It's literally a fill-in-the-blank, step-by-step guide designed to save you money and stress. And you can find it on Amazon. While you're here, hit that subscribe button for more accurate and factual breakdowns, long videos, shorts, and all the stuff that nobody is telling you, but you probably need to know about health insurance. Be the prepared one, not the panicked one. I'm McGarity, and this is Insured AF. I'll see you in the next video.